This is the August market update, and just when we thought that the market couldn't get any wilder in July, it really did. It got even stronger. Listing activity was up in most markets, but buyer activity was up even more, and we've seen that consistently for about 3 months in a row now. So that tells us that the sellers are hearing that the market is getting better, more and more putting their homes in the market, but also that there still are a lot of buyers coming into the market. In looking at those numbers right now, we're getting up as high as 93% of all the buyers are focusing on those properties that have been in the market less than 90 days, and in reality less than 2 weeks. But what that means is about 40% of the listings are over 90 days. So 60% are under 90 days, 40% are over 90 days. So from a buying standpoint, in many cases you're getting pushed out of trying to get offers in on listings that are just come on the market. So the opportunity is to chase the 40% of listings that have been sitting on the market for a while. And as strong as the market is and as much activity that you hear, there really is still a bit of schizophrenia in the market in that you do have a number of buyers, those 40% of listings that are over 90 days, they're not getting a lot of activity. In fact, only about 7% of the buyers are chasing those listings. And those listings are sitting in the market for a lot of reasons. Often it's condition, it's location, it's price. There's a lot of issues that do that. But those are also hidden gems for buyers that are getting squeezed from other opportunities to look at those. What we're watching trend-wise is we're looking at sort of where things are going long-term. So it isn't just how sales are moving, but what's the velocity of that movement. If sales are up in July, are they up at an increasing rate compared to June and May this year to last year, or is it a slowing rate? And what we're seeing is that the listing inventory, new listings coming on the market, is accelerating. So the percentage of listings coming on the market is increasing. We're also seeing buyer activity increasing, but it's increasing at a decreasing rate. So if it was increasing at 20% the first part of the year, month-over-month comparisons are about 10% now. So we think what's happening, if we can make a prediction at this point after the last 90 days or so, we think we're seeing the market moving more towards normalization. And specifically, if you look at Northwest Michigan and Washtenaw County, those two areas, those are sort of leading the market in terms of listing activity and inventory actually starting to rise a bit. Less often are there multiple offers. Still are multiple offers, but a little less often. And it's moving more towards a normal market, which is a good news for us. 15–20% appreciation rates are not sustainable. 20% a month increase in buyer activity is not sustainable. It's not healthy. So the good news is we're moving towards a more healthy market, and we hope to see in 2014 and beyond appreciation rates in the mid to upper single digits and buyer growth activity about the same, which makes it a little more normal, a little more comfortable, and more sustainable in the long run. So that's it for the month. Thanks.